Hi guys, I'm Kalila Reynolds and it's now time for another episode of Money Moves brought to you in partnership with Exim Bank's Business Advisory Service. Well, with interest rates at record lows, the lowest they've been in literally decades, now is the time for businesses to capitalize and raise funds, whether it's through equity or debt. But there's a problem. Many of these businesses, especially SMEs, they don't have proper accounting in place, proper bookkeeping in place, and so financiers and investors, they're not willing to take that risk. So what are they actually looking for? With us now, we have Melanie Wynter. She's Managing Director of Elizabeth Sloane. Hi, Melanie.
Hi, Kalila. How are you doing?
Okay, so tell us, what type of financial documents are institutions looking for?
So financial institutions, lenders, investors are looking for your income statement, your balance sheet, and your cash flow. Now, what is the need for all of this? Your balance sheet is really your financial position, right? So that shows your assets, your liabilities. It shows how your capital, the capital structure of your company. The income statement is just your revenue, expenses, and your cash flow is showing how you're managing your cash positions. So these are the things that investors, lenders, like an Exim, is looking for to do certain ratios. So from these financial documents, they will be able to ascertain certain ratios. And these ratios, they're looking at line items such as your revenue, they're looking at your assets, your liabilities, your margins. And from that, they calculate things like your liquidity, how leveraged a company is, how profitable the company is. So these are some of the things that investors are looking for to make a decision as to whether or not you are worthy of, or I should say capital ready for if you're not risk averse.
So do these things have to be done by a professional accountant, or if I might not have a knowledge of, have taken accounting, principles of accounting in high school, for example, but I can put together on paper how much I spend and how much I make. Does it have to be something professionally done, or can it just be something that I mock up?
So it is advised that you get, depending on the size of your company, the various, depending on the transactions that runs through your company on a monthly basis, you would need some advice if you don't have any accounting background, right? So a lot of companies are making that mistake where they're not hiring an accountant, they're not getting advice from an accountant, or even liaising with their auditors, right? So for instance, let's say you have a small company. You can't afford an accountant every day. And you have an administrative person. You could have an accountant come in, and that person could build the capacity of that administrative person. And that person would then know how to book and keep the books. And you could use technology. There's a lot of technology now that you can use to help you maintain proper record keeping, Yeah,
and download some software.
Yeah, so
online.
For instance, there is QuickBooks. Everybody kind of knows QuickBooks, right? But there are some free ones. There's Wave Accounting, which is free, easy to use. You may not know how to set up things like your charts of accounts, but calling in an accountant for an hour or 2 hours to just help you to set up that chart of account and explain to you what they mean, so that when this administrator is booking it, they do the bookkeeping in the right way. So you can really understand at the end of the month where you are financially.
So of those line items that you listed earlier, what is the one that the investors / financiers are really paying attention to?
So investors want to see how much skin you have in the game, right? So what is the shareholders' equity in the company? A lender may just want to see, what's the capital structure, but what's your revenue? How are you managing your cash flow? things like your assets, your liabilities, marketable securities. People want to be sure that when I lend you the money, you can pay it at the end of the month, whatever that interest rate or that payment is. So as a result, you need to see how liquid they are, and these are some of the line items that they're using to calculate that ratio.
Mm. Speaking of ratios, what types of ratios or margins are they looking for?
So they're looking for your liquidity ratio. So how easy is it for you to meet? How easy is it for you to sell and gain cash from the items that you have on your what you call an asset registry, right? Mm-hmm. So you can have assets, but you can't liquidate them fast enough to make your payments. So companies or investors or lenders, financial institutions are looking to see how quickly you can liquidate to pay or meet your obligations if needs be.
So there's not a specific number that they're looking for?
Well, so I wouldn't go into the specific numbers because the various ratios have different numbers that you'd look for.
Mm-hmm. All right, thanks for this great advice, Melanie. Okay. And we're going to have Melanie back next week to tell us some more. Melanie Wynter is the Managing Director of business development firm Elizabeth Sloane. Well, that's it for this episode of Money Moves, brought to you in partnership with Exim Bank's Business Advisory Service. I'm Kalila Reynolds. Check out their website, eximbankja.com. See you next week.